Uncertain fiscal policy makes US Treasuries hard to sell, by www.forexconspiracyreport.com. The uncertainty generated by the Trump administration has come home to roost on the US dollar and US Treasuries. Bloomberg reports that Japan is shunning US debt. America's biggest foreign creditor is unloading US debt, and in a warning sign for the $13.9 trillion Treasuries market. Japan's famously risk-averse money managers are giving little sense that an about-face is imminent, even as their new fiscal year is poised to bring a clean slate after a punishing stretch of losses. The specter of Federal Reserve rate hikes and the potential for economy-boosting fiscal stimulus are keeping Japanese investors from seizing a buying opportunity that seemed inconceivable just 6 months ago, before President Trump's election. And their reluctance, even as the cost of insuring against swings in the dollar is near the lowest since January 2015, raises doubts about the sustainability of the latest U.S. bond rally. Rates are not the problem, as current rates make Treasuries attractive to foreign investors. The problem is uncertainty. We wrote recently about Japan selling U.S. Treasuries. Next to China, Japan is the biggest holder of U.S. debt, and Japan is having second thoughts. Why is Japan selling U.S. Treasuries? Bloomberg writes that America's biggest creditors are dumping Treasuries as a warning to Trump. In the age of Trump, America's biggest foreign creditors are suddenly having second thoughts about financing the U.S. government. In Japan, the largest holder of treasuries, investors culled their stakes in December by the most in almost 4 years, the Ministry of Finance's most recent figures show. What's striking is the selling has persisted at a time when going abroad has rarely been so attractive. And it's not just the Japanese. Across the world, foreigners are pulling back from U.S. debt like never before. From Tokyo to Beijing and London, the consensus is clear. Few overseas investors want to step into the $13.9 trillion U.S. Treasury market right now. The prospect of more deficit spending in the USA as part of this is the odds that interest rates will be going up, making current holding less valuable. The chaos that is the Trump administration has rattled investors, and that is why Japan and others are selling U.S. Treasuries. What is a forex trader to do in these circumstances? If Japanese are not converting yen to dollars to buy treasuries, and especially if they are selling treasuries and converting out of dollars, the U.S. dollar will gradually fall. The aversion to U.S. debt is not just in Japan. Thus, the downward pressure on the dollar will be generalized. On the other hand, the USA has a huge appetite for adding on debt. So rates will go up in order to entice buyers to purchase U.S. debt. That will eventually level off the U.S. dollar, but likely at a rate less than today's rate against all major currencies. If the Trump administration gets back on track and makes something out of its promises to improve the U.S. economy, that might help the perception of U.S. debt. Otherwise, expect to see a steady slide of the greenback. For more insights and useful information about Forex markets and trading, visit www.forexconspiracyreport.com.